Well, given the price share reaction, I suspect that he probably will, even though he still says that there's still work to be done. As you say, they are about 10 quarters of the way through their 12-quarter transformation plan. And just looking at the numbers today, Nancy, as you say, they beat on the top line, they beat on the bottom line. But let's dig a little bit deeper and look at the composition of where the strength is coming from, because really it's indicative of how much this transformation plan has actually achieved its purpose. So if you go back to the beginning of 2015, about 60% of the overall operating profit came from its investment banking division. Today, that number is 19%. 80% of their operating profits are coming from the wealth management division. So they have really managed to steer the business away from that volatile, capital-intensive investment banking business towards wealth management. And today the numbers are very strong. This follows on from a very strong first quarter. Now we've got a very strong second quarter as well. Again, doubling in net income from where we were a year ago. I sat down with the CEO, Mr. Thiam, a short while ago, and I asked him whether he was feeling pretty pleased with these numbers. Let's take a listen.
What we like is that everything we said would happen is happening. The growth in wealth management, what's driving our profitability? The growth in wealth management, the operating leverage, and the shrinkage of the SRU. So the growth in wealth management is happening. We have 23.5 billion of NNA in the first half. If you add the asset management, 17 billion, it's 40.5 billion. So we've added a small bank to Credit Suisse in 6 months. That's really very pleasing. It's drive revenue, plus 7% in revenue in our sector. That's still quite unique, being able to grow revenue. We have the positive operating leverage, 7th quarter in a row, where we have revenue up, cost down. Revenue is up 7%, cost is down 5%. So that has created 4 billion of cumulative profit over 7 quarters for the bank. And finally, the SRU, which is for me almost the brightest spot. When we started in this, the SRU was 57 billion of RWA. And we said we'd take it down to 11 by the end of 18. We're at 10. So we have hit the level at which we said we would close down our restructuring unit. And that's really a milestone in this whole restructuring we engaged in 2.5 years ago.
So you're about 10 quarters of the way through a 12-quarter transformation plan, right at the end. Are you still bang on target to meet your return on tangible equity target for next year of 10%, your cost target of 17 billion? All of these remain intact?
Yes, absolutely. I mean, the cost discipline has been great. I think we have a clear beat on cost again this half year. CET1 is in place. ROTE is driven up. If you look at the SRU, we guided to 1.4 billion of losses this year and 500 next year. So that's a 900 million increase in profit. So when we say we have levers under our control to drive profitability up, that's one of them. The other big one is funding. We're going to pay down some very expensive funding we took a few years ago. That's also going to reduce our funding needs. And finally, the SRU itself was very costly in terms of funding. As it disappears, the funding necessary for it disappears. So we have all these upsides. When we say 1.3 billion, you've got more than 1 billion of PTI on a full year basis that will come almost automatically next year. And that takes you from where we are today to the 10 or 11%
And just looking at it from the outside, it appears as though finally the fruits of the success, fruits of the transformation are beginning to become more apparent in the numbers for the last 2 quarters. But yet you look at the stock price and it's still down 9% in the year, broadly in line with the general financials sector. Do you find it frustrating that people are not rewarding you?
No, it's just a basic question of finance. Okay, now let's talk numbers. As you know, share prices in banking are driven by the tangible book value. Okay? So all these things we're talking about go for the tangible book value. The SRU and its predecessors have lost us 7.1 billion Swiss francs. Okay? The fines and litigation, another 3 billion. You're at 10. The restructuring, 1.7. You're basically at 12. The DTA, 2. You're basically at 14. And all kinds of other little things, another billion. So you've got 15 billion that I had to spend to clean up the legacy. That all came out of a tangible book value. That actually take your share price up to about, plus the capital raise, to about 11, if you do the maths. We're at 15 point something, because we've created 12 billion of profit since then. It's very important to understand that journey. You can't just take a share price. A share price is representative of a tangible book value. We had all these enormous problems to to solve with very large numbers attached. There is no way that can be dealt with without driving the tangible book value per share down. Now, tangible book value per share is up. That's what's going to drive the share price and the re-rating. Because when the tangible book value per share goes up, your share price goes up. And then you re-rate. So I can tell you in the last 6 months, every one of the top 20 shareholders has bought. That's my indicator. Every single one has increased its exposure. The share price in the short term. There is absolutely no point comparing the share price before we dealt with all these legacy issues to the share price now. What you have to look at now is the trends, and it's very positive.
So there you have it, Nancy, Mr. Thiam. And I asked him about the share price and whether or not it was frustrating to him that still before today, the shares were down about 9% year to date, in line with what we're seeing in general for the European financial sector. And he said, look, a lot of that is on back of legacy problems they've had to deal with, which have hit their tangible book value per share. A lot of those issues are out of the way now. He said we had 15 billion worth of costs to contend with. A lot of those headwinds are now can be put to the backside, and they can focus forwards on generating more profitability coming from that wealth management business and so far into this restructuring and reformation plan. And I thought it was interesting, he said that out of their top 20 shareholders, all of them have increased exposure to Credit Suisse over the last 6 months. So for him, it is a positive spin. And to answer your original question, I suspect he may be patting himself on the back this morning.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.